In this video, we're talking about the top blue chip stocks to buy now in 2021. So feel free to like this video for the YouTube algorithm so more people can learn about investing in finance. So the first blue chip stock we're talking about in this video is called Apple stock, ticker symbol AAPL. They're basically a technology company that designs, manufactures, and sells consumer electronics such as the iPhone. They also sell electronic services such as iCloud services. So we're just going to look at some news that relates to their recent quarter results. So we have here, they had a revenue of 111.4 billion, which is up 21% from last year. So that's really good. Value of their company has doubled since last year as well. Went from a $1 trillion company to a 2.4 trillion company in 1 year. Because their iPhone sales, their AirPod sales, the iPad sales, everything, even their services sales. So that's really good for the company. I do think more and more people will continue to buy Apple's products. So total sales of 91,819, but until December 26, 2020, they had 111,439, which is a good increase. In products, they had 95 billion, but in services they had 15 billion. So most of their sales comes from their products alone. To the balance sheet, they have 354 billion in assets. So that's really good. Total liabilities is 287 billion. More assets than their liabilities, which is always a good sign for a company. They have 36 billion in cash. So they actually have heaps of cash. They're not going to debt anytime soon. They have enough cash to pay off their short-term debt. Now we're just going to talk about some price targets for the stock. One price target of $150.52, which is 11.19 upside from its current price. They have a high of $175 and a low of $80. So that's really good for this company. They have 20 buys, 5 holds, and 2 sells. So it's really good. So let's look at some analysts, what they think. We have 4 analysts who rate this as a buy, 1 as a hold, and all their price targets above the current price. So that's really good. You believe in the company, you believe in the future, and you believe in their fundamentals, then invest in the company. No matter what these price targets are, you still want to invest in the company for what they are, not based on these price targets. Right now we're going to see what some big institutions are doing. Institution here, Wealth Partners, who increased their position in Apple. One institution who decreased their positions, which was Per Rival Capital. So that is really good because there's only one institution who sold out their positions. So that's really good. How I would invest $1,000 in this company. So it's trading around $135.37. It is up 0.18%. On the month it's up 5%, so it's up 66% on the year. Look, during the market crash, only dropped 10%, whereas other growth companies, they dropped either 30 to 40%. So this is the great thing about blue chip stocks. So I put my whole $1,000 on the stock on Monday because we're not going to average down, because we're not going to touch the stock for 20 years. We'll just put the money there and not look at it and not sell the stock because it's a long-term hold. I would recommend holding this for at least 20 years. Apple's sales have increased consistently over the last 5 years. The next stock is called Microsoft Corporation, ticker symbol MSFT. So we can see in the past 3 quarters, they've done extremely well. They beat all the estimates. It's a technology company. It's just like Apple. It develops and sells consumer electronics. So like the Surface Book Pro, the Surface Laptop. They have the Xbox. They have OneDrive. They have Office 365. They have OneNote. So they have a bunch of services. This is a good company because with businesses, they need services like as Office 365. Students, a student like me, I use Office 365, so that's why I really believe in this company. I'm going to talk about their recent quarter results. So expected for them to report 1.64 per share, but actually reported 2.03 per share. And also, they expected revenue of 40.18 billion, but they reported 43.08 billion. So the revenues grew 17%. So we're just going to go for the recent earnings report. We're just going to look at their revenue. So in 2019, December 31, they had 69 billion in revenue, but in 2020, they had 80 billion in revenue. So that's really good increase. So we're going to see where most of their revenue comes from. So according to this table, they have 9 billion from their products, but 15 billion in their services. So they have 304 billion in assets. They have total liabilities of 173 billion, which means they're a stable company since their assets are over their liabilities. Now we're just going to look at some price targets from some analysts. So they have average price of $280.18, which is a 14.36% upside from its current price. So that's really good for the company. So they have a high of 315, they have a low of 245. That is really good. You can see that the low of 245 is 0.01 cents below the current price, so that's really good. They have 24 buys, 0 holds, and 0 sells. So that's really, really good. We have 5 analysts that recommend as a buy. They have their price targets range from 270 all the way to 292. So that's really, really good for the company. So we're just going to look at what some other institutions are doing. Say in the past week, we have one institution called Provident Wealth Management who decreased their positions. We have one other institution called Sandbox Financial Partners who is increasing their positions. How would I invest $1,000 in this company? It's currently up 0.2% on the day. The week it's up 0.66%. It's up 15% on the month. On the year, it is up 37%. So this is a stable company. Stable growth over 5 years and stable growth over 45 years. You just want to invest your money in this company and not look at it for 20 years, then I would recommend putting your first $1,000 on Monday, no matter the price, because we believe in the company. Put your whole $1,000 on this company, and then you wait 20 years, you check back 20 years, the stock could easily be a $500 stock. They're not going to go down 10% like growth stocks, like Tesla. They're not going to go down 10%. The next day it could go up 10% and might never come down. The reason why I'm not a fan of averaging down is that these stocks are for long term. Let's say this goes up 10% next week and there's no dips. These blue chip stocks might go up 100% in 3 years, and if you wait to buy a lower price, it might not even go to a low price. You're missing out on the gains. That was the 2 best blue chip stocks to buy in 2021. They have massive growth potential. Do you think these stocks are going to do well in the future? We're seeing their revenues are growing consistently. Their products having more demand, the iPhone, their Microsoft services. So that's just my opinion. To think about is the short-term gains worth it for a long-term gain? So if you do think that short-term gain is worth it, then average down. But you think it's not worth the risk, then just put your first $1,000 on Monday. Feel free to subscribe to my channel if you want to see more videos like this. Select this video for the YouTube algorithm so more people can learn about investing in finance. Hope you guys have a wonderful day and see you guys in the next one. Happy investing.